I'm Priscilla Barrera with the Investing News Network, and here with me today is Chris Berry, founder of House Mountain Partners. Chris, thank you so much for joining us again.
Thanks for having me.
All right, so last time we spoke was back in June. Just to start, could you tell our audience what were the main trends you saw in the space, in the lithium space, in the second half of the year?
Sure. Well, I think right now the main trend is everyone's really focused on China and the fact that EV sales are slowing down. There's still year-over-year growth as we're sitting here today, but the fact that I guess the rate of change of the decline has accelerated somewhat is a little bit concerning.
All right, and also last time we spoke, you mentioned that the name of the game in lithium right now was trying to figure out if we were at the bottom. Are we there yet? And if not, do you think that investors will receive more clarity about where the market is moving next year?
I'm not sure. I think we are at the bottom, or certainly close, and I think the real question that you want to ask yourself is not so much are we at the bottom, but how long do we stay here? Okay, and that has everything to do with demand and getting the supply chain funded and built. So, I guess my view going forward, obviously for the remainder of this year, it's basically over, but also 2020 is we probably trade within a range or sort of bounce along the bottom until some of the excess spodumene that's floating in the market right now gets mopped up, and I think that's going to take probably at least a year.
All right, and it's also been a challenging year for lithium companies in 2019. Do you expect that to continue in 2020?
Yeah, I think, look, for any of these commodity companies, okay, whether or not they're producers, near-term producers, or aspiring producers, the name of the game is the trajectory of the commodity price. So if lithium prices are rising, it's the type of thing where it raises or floats all boats, or whatever the phrase is. And of course, the downside is more extreme. And so that's what we've really seen over the last sort of 12 to 18 months. And so, from the perspective of what does a company do, obviously you got to stay debt-free, you've got to manage your balance sheet and optimally manage your cash just until sort of we get through this next 12 months.
All right, so then for investors that are watching us today, which companies do you think are going to be the winners in the battery metal space as a whole in the next decade?
Yeah, look, I'm not gonna pick favorites here. I know everybody likes the names, but it's all about, I think, two things: the management sort of experience in the space, and I've been saying this for years. This is nothing new, but management experience in the space. Both technical and financial, so the ability to manage that balance sheet, raise non-dilutive funding, do joint ventures, that's really how I think you get through some of the tough times, these ruts in the commodity space.
All right, and I think there's been some agreement in terms of the long-term demand forecast expectations and this EV trend being the mega trend in the next decade. But there's been some questioning about the methodologies being used for forecasting demand. What do you think is key for investors when looking at this forecast for supply demand? What they should be paying attention to?
Well, if EVs are the name of the game, just to use that cliche again, you've got to look at EV sales. And we're sort of right on the crest of the wave, I think, where a number of these major OEMs are going to be releasing more and more electrified models. And so tracking the trajectory of those sales both inside and outside China is key. I'm not necessarily going to argue about one forecast that has 1 million tons of demand versus 800,000. We know the trajectory, we know it's going up, and we can quibble about the amount of lithium in a battery or anything like that, and I'm not really going to do that. We know we're going to be at 800,000 to 1 million tons in the next 6 or 7 years. The bigger questions that I'm focused on are how do we raise literally the billions of dollars of capital in the next 6 to 7 to 10 years to make this vision, these demand forecasts, a reality. That's the key.
All right, and in terms of M&A activity in the space and partnerships in the lithium space, were you expecting to see more of that this year? And what do you think is a challenge for companies to make those partnerships work?
I was expecting to see more of it, and I think, look, I still am expecting to see more of it because of the low lithium prices. I think a lot of companies are going to have to, not throw in the towel, that's not the right phrase, but certainly look at their own deposits, look at everything, and take a look at, are we better combining forces with another company and trying to survive through this or not? And so, I guess my forecast for 2020 going forward would be increased M&A, but again, really only for top tier or close to top tier assets.
All right. And what factors are you going to be watching in 2020 aside of for M&A activity? What else are you going to be watching in the battery metal space?
Yeah, there's really no secret here. I mean, for better or for worse, everyone's focused on pricing. I would like to see more West Farmers type of deals. In other words, we need 4 or 5 of those. So I'd like to see that type of money, that money that I call patient capital or money with a long fuse, come into this space, because that's really, I think, the strategic long-term capital that the lithium-ion supply chain is going to need to really grow and solidify.
All right, and considering the current market conditions and what you expect to see next year, how should investors approach this season?
Well, again, I think, whether or not we're in a bull market or a bear market, I don't necessarily think your investment philosophy should change. You want to find the top-tier assets, and of course, you want to find those management teams that have experience in the space, both on the financial side and the technical side. It's pretty simple.
All right, and in terms of missing trends, what do you think the lithium space is not talking about enough? Are there any missing trends that investors that are watching us should be talking more about?
No, it's funny, for such a small industry, lithium, $3 or $4 billion in revenue, I feel like it's really under the microscope. I mean, it's front page news and has been for the last couple of years, both for good reasons and unfortunate reasons. So I'm not sure if there's anything really missing. I do think that supply chain development around lithium is going to continue to be a huge issue. I think that battery recycling is going to become another major focus in the next few years as well. So, if there's something that doesn't get a lot of press right now that probably should within the context of lithium, it's arguably the recycling space.
All right. And my last question for you today, considering what you're expecting will happen in the lithium space in the next decade, if you have to choose one word to define that, what would it be and why?
One word is tough. Explosive, which is probably the wrong word to use for batteries. Or, you could also use a word like subtle. I mean, I'm 100% sold on the idea of this supply chain is going to get built. Lithium demand is going to increase. Obviously, it's not going to go at 18% a year indefinitely. There will be fits and starts. But I'm very confident that, when we're doing these interviews in 6 or 7 years, if we still are, you're going to see a much larger, much more robust lithium-ion supply chain. So it's explosive, it's exciting, it's just very, very, I'm fortunate to be involved in it at this point.
All right, Chris, thank you so much for joining us today.
Thank you.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today is Chris Berry of House Mountain Partners.